Indian markets are positioned for a technical breakout fueled by crashing crude oil prices, but the momentum faces immediate hurdles from two major macro events overnight. Tonight's U.S. Fed policy decision and trade talks between PM Modi and Donald Trump provide the immediate catalysts that will dictate if the current trend continues. Geopolitical tension is easing as a drafted U.S.-Iran deal looks to end the Lebanon war and reopen the Strait of Hormuz, with shipping traffic expected to normalize within 30 days. This chart shows Brent Crude's steep 3-month decline. This de-escalation has pushed prices below the $80 mark, returning them to levels seen before the conflict began. While the Federal Reserve is expected to pause rates tonight, commentary from Kevin Warsh remains a variable that could shift the outlook for the Fed's future direction. Simultaneously, PM Modi meets Donald Trump at the G7. Their discussions on trade tariffs and visa restrictions will define the economic stakes of the bilateral talks. These international developments will determine if the positive domestic setup receives confirmation or a reversal at tomorrow's opening bell. Domestic resilience remains intact despite foreign institutional selling in the cash market. This is being offset as institutional players cover over 13,000 short contracts in index futures. This graph illustrates the Nifty 50's price action. The index established a channel pattern breakout with a support baseline at 23,800. Defending 24,000 is required to reach the weekly upside target of 24,420. This chart displays the Bank Nifty, showing relative strength through a rounding bottom formation. It currently has a support floor at 57,000. The trajectory suggests a weekly target range between 57,800 and 58,200. The technical structure of both indices supports a strategy of buying on dips, provided these established support floors are strictly respected for risk management. Crashing crude prices are providing a direct tailwind to oil marketing companies and aviation stocks as input costs decline. Institutional activity is also high today, with an 892 crore block deal for DOMS and a 1,500 crore QIP launch from Kim's. Mumbai real estate stocks face a localized headwind as the BMC implements a 20% cut in construction water supply, effectively pausing some site operations. Actionable setups include HDFC Bank, which has an upside target of 805 rupees, and Oberoi Realty, targeting 1,770. Despite broader index consolidation, stock-specific volume will likely remain high as the market reacts to these localized deals and regulatory news. The immediate evidence favors defending the 24K level on the Nifty and using price dips for entry, while maintaining hedges for the overnight risks. While domestic charts are positioned for a rally, the late-night headlines from Washington and the G7 will determine the market's trajectory for the rest of the week.